Let's talk about crypto lending. Abra cadabra. The trick is that Abra was alleged to be insolvent for the last few months, according to state securities regulators here in the U.S. This, I think, goes to show the interwovenness of all these failed crypto lending firms. And Abra seems to have been ensnared because they have tens of millions of dollars on various bankrupt or otherwise impaired platforms. This is the Texas State Securities Regulator. We've seen a lot of state securities regulators in the U.S. go after these crypto lending platforms, from Celsius to Voyager. They're taking a very active role in protecting or alleging to protect their consumers that live in their states over the offering of unregistered securities and other sort of interest-bearing schemes. So this is interesting to see. The fact that this company has sort of been quietly insolvent for the last few months is certainly a notable finding, as evidenced in this claim and complaint from the Texas Securities Regulator. So I'm going to toss it straight to Adam for his thoughts.
Yeah, I mean, I think, again, another key word here, as with many of these stories, is alleged. Again, the the regulator is alleging that they have been insolvent, but that hasn't actually gone through courts yet. But I think that your broader point is totally the one to focus on, which is just really that, one, the interconnectedness of these companies and the lack of transparency over those connections really comes from the idea that when you have this much money and you have to manage that much money, that's actually a big challenge. And it's something we've seen many of these projects run into, where it's like, when you're small, relatively speaking, you've got maybe a couple, tens of millions of dollars that you're looking to place. Like, that's something that you can do, and you can have a decent amount of kind of diversification and expectation, that you're not going to kind of eat the opportunity you're trying to go at. But what we've seen is that a lot of times these projects from those early successes grow into something that isn't really sustainable. Now, Abra's business model hasn't really ever been about the core lending thing. Seems to me this is more of a treasury play than anything else. And the problem with those treasury plays is, where do you put all that money, right? So again, there's more details for me to dig into on this one, but it's an interesting story and a surprising one for me. It seemed like they were better actors than all of this. So I'm waiting to kind of see what comes from it. Will?
Yeah, just a few names here. And to catch everyone up, like, essentially the issue here is that a lot of the treasury for Abra was placed in a bunch of people who went bankrupt or in Chapter 11 processes. So that include Babel Finance, which was a pretty big lending facility out of, I believe, Hong Kong and Singapore during the bull market. They've since had a lot of problems and are going through a Chapter 11 process. And then there's also Three Arrows Capital is involved with this. And I think one other company as well. It's Genesis. Now I'm just remembering. So tough. Like, you put all your money in these projects expecting them to be a good custodian, use it for lending, use it to be able to bring yield in. And they seem like they spread out their bets as well, right? A lot of these companies that we think of, namely maybe the Gemini and Genesis debacle, which is currently ongoing, that was just one custodian and one lending program. This, they spread out their bets to three different people, and all three of them went belly up, and who knows what else. Again, this is all alleged, so we still have to find out what happens with the quote-unquote insolvency. But for a state securities office to go out and say this hints that they probably have very strong evidence against it. The one last thought on this is the fact that the states are going after some of these programs and projects as opposed to just the SEC. It's interesting that there's like a multi-tiered approach within the U.S., right, where the SEC is kind of taking out these bigger projects and then the states step in afterwards. We saw that with the Binance dispute, I believe, where Binance was sued first by the SEC, and then a bunch of states also came out afterwards and had some suits. So a lot of this is still alleged. We still need to have like the finer details, but not another great headline. Jen, I'll throw it up to you.
Yeah, you mentioned the alleged exposure to Genesis, 3AC, Babel. There's also some reporting that's saying Abra has had allegedly misrepresented their exposure to FTX, and that like transparency of all of that interconnectedness, I feel like, is the theme of everything that's happened late last year and the beginning of this year. And we're seeing the knock-on effect. If we zoom out a little bit on this story, it was mentioning Abra's been around for 10 years. I think last year they announced that they were going to offer crypto rewards through a partnership with Amex. And we heard similar partnerships with the likes of FTX and some of these other players who no longer exist or who are going through bankruptcies right now. And it just like brings me back to this mainstream adoption conversation we were having. I think partnerships with players like Amex, like Visa, like MasterCard really instilled trust in a lot of people who may have been burned by a lot of the platforms we're talking about right now who had that interconnectedness that we weren't able to see through. So I hope that the industry can learn from all of this information as it comes to light. Again, in this particular story, everything is alleged. We still need to get some information, but I hope that we're able to grow and learn from here and can build a better industry for the future. That is my optimistic take on this story.
Just a sector of lifetime learners, these crypto people. Lifetime learning is the mandate.